Hello and welcome to Real Day Trading. What you're looking at right now is the market. Looks like it's done a lot, right? Dropping down, coming up above here, dropping back down again. On January 20th, this market closed at 446.75. Today, pretty much a month later, February 15th, we closed at 446.07. We have gone nowhere. This market doesn't know where it's going. So anyone who tells you they know where it's going is full of shit. Why does this market not know where it's going? Because it seems to be completely news dependent. Is there going to be a war with Ukraine and Russia? I don't know. Is that priced in? We don't know. Inflation? Rate hikes? Is that priced in when the actual rate hikes happen? Are we going to drop like a rock? Are we going to go up because now the market has certainty? Guess what? They can write the story both ways. Rate hikes announced, it's official. Market goes up. Well, the market likes certainty. It was all the ambiguity. Rate hikes announced, market drops. Well, what can you expect? When rate hikes happen, the investors pull their money out. No matter what, they can write the story. So anyone who tells you they don't know, this market doesn't know. That's why you have to only play what's in front of you. Today, market was green. Tomorrow, maybe not so much. We will find out. That's why right now we're keeping a balanced portfolio. Right? It's either that or you just don't trade. It's one of the two. You keep a balanced portfolio in this type of market, and you hope that one side of that portfolio outperforms the other, and you do well. Today that happened. Or you don't trade. Now, if you're not an experienced trader, that's probably your best bet. In fact, you should be trading, but you should be trading one share or one contract. You should be paper trading. This is a great market to practice in, right? Practicing in bullish markets, but if you're practicing over here, sure, right? Okay. Just be patient enough. You'll make money. Practicing in this market, well, that's the trick. So what do we do here? We have a crazy market that's going up and down and up and down. Now, one question I get asked a lot is, how do you find the stocks? Well, let me show you. Here is custom search and option stalker, but TC2000 also has customizable searches. Thinkorswim, their searches are, you know what? No, I'm not even going to bother with that. There are plenty of good search or scanners out there. I'll give you an example of what you should be looking for when you're searching. One, option liquidity. I put this usually on -2 to 15. Basically, you want liquidity if you're doing options. You certainly want tight bid-ask spreads. Heavy volume. Heavy volume is always important. You want people to be trading the stock. Let's say you're looking for a bullish stock, right? Okay, well, given that today the market was way up, the stock certainly should be above the previous day's high. If it isn't, it's not very bullish. So right off the bat, heavy volume above the previous day high. If I scan, well, I'm going to get a lot of stocks, right? When you start figuring out your searches, your scans, how you want to look for stocks, you want to cast as wide of a net as possible to begin with. Then you start to narrow down. So let's say I want only stocks that were strong against SPY on a daily basis. Scan. Okay? Smaller list. Now, let's say I want to make sure they are above their 50 SMA, 100, and 200 SMA. Well, now we have a manageable list here, right? this is a good list of stocks. Just that simple. I narrowed it down, chose my parameters, and then got a manageable list of stocks. How would I then go about looking at this list that I have of heavy volume stocks that are above their SMAs, that are strong against SPY? Well, I would say, okay, let's take any one of them, TCOM. And I haven't looked at any of these beforehand. So let's go to TCOM here. TCOM. Look at that. It broke through its 200 moving average up here. It certainly strong on after hours. Very good, strong upward trend. It's got heavy volume down here. This is a good stock. It's a good stock to try to swing. It doesn't move much, but it's a solid stock. TCOM would be a stock that you'd want to put into your watch list for tomorrow, right? And what area would you want to make sure if you wanted to put an alert on TCOM? Well, you see here, you have a consolidation here, and it could not get through resistance at this point, right? Okay, so we don't have any trend lines really to draw. I mean, there's one here that you could put in, but that one's going to come in all the way at 32.99. Now, if you were super, super conservative, right, you only want to trade stocks that you know have broken through. Well, you put an alert there. Set alert. Breaks that, going long on TCOM. If you are less conservative, well then this resistance here, which is at, I don't know, 31.39, and we got all the way up to, let's see here, got up to 31.60 right here. I'll just draw a line right at 31.62 is fine, 31, right there. Right there. And I can put an alert there too. Okay. There we go. Okay, TCOM set. Going back to our search. What else did we see? Pick another one. Let's look at EXPE. Why not? EXPE. Okay. Oh, that's another good looking stock, isn't it? So, we have found two right off the bat, really nice stocks. This one here, obviously, is higher priced. It broke through yesterday's high, which was an all-time high. So here you have a stock at an all-time high. I love stocks at all-time high. This stock got up to $212 exactly. Seems to like even numbers. Had really, really strong reaction. I'm guessing this was from earnings. It must have been. Broke the upper trend line. Okay, well, this stock here is pretty damn strong. I am going to now just put an alert on the stock at today's high, which was 212. If it goes through that, I want to know. That means there wasn't anybody taking profit, and it's still going strong. Another one here. Let's see. A couple of them had earnings, obviously. Let's try SABR. Now this one here barely has broken through. Barely. 1087 is the 200 moving average, and it's currently at 1091. That is not convincing at all. So on this one, I would like to see this stock break here. Break through this top point, which is 1245. Until then, don't really care about it. So that's how I do it. That's how you go through, right? If you were to While I was doing that, you were seeing that. There you go. SABR. That's a little bit better, right? Okay. If I wanted to try a different type of search, then I would just go back here to the search and change the parameters. Let's say I want one that has a trade signal. None. Take off the SMAs. Let's see now. Nothing. Try again. No stocks out there have trade signal new. What about this trade signal? Signal. Cannot speak. 1. GOL. GOL. Why does GOL have a trade signal? That's why. Okay. The cheap stock pops up. Earnings 317. Here we go. I'd like to know when this stock here, it looks like it broke through right at that point, broke through all of its SMAs, and it closed on its high of the day. All good signs for GOL. A really strong volume too. Also, all good signs. This is a stock you'd want to trade. You don't even have to put an alert on this. Just as long as the stock opens tomorrow above today, good to go. All right. That just shows you a little bit how one can go about finding stocks. You know, there are various things you want to look for when looking at stocks. You know, you can look for ones that have broken out of a compression. You can look for stocks that have momentum, ADX here. Stocks that have a Heikin-Ashi reversal or continuation. All of these are different criteria, and you can go bearish and bullish, different combinations. You can look for stocks that are typically surge into earnings. Depending on the quality of your scanner, there are limitless what combinations you can choose to figure out of those 6,000 stocks out there, which ones are the ones that you should focus on for that day. And while you're trading, by the way, I would use 5-minute, 15 and 30-minute intervals on my searches, not daily. Daily, yeah, that would get me set for tomorrow. Great, I have a good list for tomorrow now. But during the day, I want to constantly keep updating the stocks I'm looking at, because they change every 5-10 minutes. Now let's take a quick look and head on over to the 5K challenge, everyone. Here we go. We are here, and $4,221. Yay, we were up today by over $1,000 in this account, the 33% increase today. What did we do for that increase? Well, clearly we did a lot here. First thing we did, see this? See what happens to me? First thing we did today is we bought back and closed down Johnson & Johnson. Why did we do that? Because Johnson & Johnson can kiss my ass. That's why. Here's Johnson & Johnson. Johnson & Johnson, most of the day here, showing great relative strength. Going up. Even as the market stabilizes, Johnson & Johnson's up $1.80. I did not want to hang around to see Johnson & Johnson and whether or not it could break through its 200 SMA. It did for a while. It came back down, but this is not the best put debit spread to have on right now. There are better ones. So got rid of that. Okay. Next thing we did is we closed CFVI. Needed some. I closed one of them here to be able to close out the rest. We took credit on Tesla. That was going up. Again, in this type of market, you do not know which direction it's heading. I had to make sure I took the profits when I had them. If this was a trending market, stock like Tesla, the way it's going right now, would have let it ride. Of course, But in this market, yeah, I'm going to take the break even or slight profit on the Amazon Butterfly. I'm going to take the profit on LVS. And certainly going to take the profit on Target, which turned out, look at Target here. Let me show you. Target. Here it is. Okay. We took profit down here, so couldn't have got much better on it. And it started going up anyway. Yeah, it wound up back down here again, but we would have had to hold it the whole day. Target will probably continue to drop. I mean, look at this. It's below this line. Could have held it again for another day or two and squeezed more out of it. And again, that is the conservative approach. You can take these spreads and just hold them. Target's not going anywhere. PDS and Target, look at that. It's well below its line here. Fell well below support. That support's now resistance. You can hold it, but good morning, everyone. I'm going to hold Target. See you tomorrow. Great challenge. That's a lot of fun. So what else? We then started to add. I added HUN and I screwed up. I used a day trade on this. Why? Because I thought the earnings were after close. The earnings were before the open. There was no earnings after close. HUN is fine. I was doing fine on that trade. I closed it. I took profit, but there was no reason to take profit on it. I could have just kept it going. Well, I mean, look at this. Look at this chart. This is a great chart. I want this stock back. Look at this. Amazing chart here. Why did I take profit on HUN? Should not have. I just thought for some reason I had in my head earnings was going to be after I saw the date of 2:15, and normally when earnings already occurs, even if it's in the morning, TC2000 changes the date to the next earnings date. Not the next. It doesn't happen the next day. It immediately changes it. It's not changed here, so I thought, oh, it's happening after close. I still should have double checked that. I did not. Great. Okay. Next, we did a couple other things here. I'll run through them a little quick. But AMD powerhouse today. We did a little something different on AMD. We have 5 call debit spreads contracts, 119 to 122 for an average of $1.32 here, right? So that's going to give us $2.68 potential, $1.68 potential profit. And there's 5 of them, so that gives you $840 potential profit on that call debit spread. Great. But when AMD dipped, I took advantage of that and then got 3 more, but this time 119, 123. And I got that for $1.41, which gives us a $2.59 potential profit, which there is going to be $2.59 is $777 potential profit on that one. So combined together, now the spread has potential to give me over $1,500 in profit if AMD finishes the week over $123. That may be one worth holding. Just hold on to it. If AMD finishes the week over 123, we will get around $1,500, $1,600 for that trade. Looking at Adobe, now when I took this put debit spread, right, it's a $10 spread, $3.69. You got around $6.31. You got exactly $6.31 potential profit. Have 3 of them. So we're risking here over $1,000 on this spread for over $1,800 on this for profit. Adobe was very weak when I took it. And look here, Adobe, I took it around here. Look how weak it is. See, weak? That's pretty damn weak. Look at this daily chart. That daily chart screams weak. Can't get more bearish than that. Well, you can, but it's pretty damn bearish. Earnings is not for a while. But of course, when the market rallied, so did Adobe right there. And right now, tomorrow, if Adobe does not continue down or doesn't show relative weakness, I'll have to close this one for a loss. This is not one where I would close out the short put and let the long put run. Yeah, if I'm right, you could end the challenge right there on that, right? If I close the short puts on this, which currently the short puts for Adobe are worth, bring it up here, where is it? Short puts on Adobe, $505. Take that profit there. And then if I let the long puts run, I could get almost $2,000, $3,000 profit on Adobe alone, as long as Adobe decides to drop. That is a risk, right? And we're not taking those kinds of risks. You could, but they're risks. Space, obviously, doing great today, doing great after hours. I took a couple of calls on Space. MGI, I'm waiting to see on this buyout here if shorts are going to cover or not, or if they already have. It's a lotto play, but pretty low risk. This price is not going anywhere. If shorts cover, MGI price is going to go up. I'll show you here. MGI and the buyout, and there we are. See, it's not really going. I mean, it looks flat, but it's not going anywhere. This is like 1058 to 1057. It's just hanging out up there. But if shorts decide to cover, this thing could pop up to 1112, and that's what I was looking for. But if it doesn't, it doesn't, and I just sell it off tomorrow. God knows I don't have a day trade anymore because I used it on HUN. And BE, I got one contract on that. Continue to add to our perennial favorite BHG. Soon we're going to have like 100 calls on this thing. It's like over 43 calls. And just for the hell of it, I bought 250 shares of Hook, which right now at $1.96, and right now it is at $1.96. So it hasn't gone anywhere either. Just parked the money in Hook, so it's doing fine there. Hopefully by the end of tomorrow we'll be over 5,000 and on the right side of this challenge. Finally, we've only taken a week or so to get to the right side of this damn challenge. But, you know, hey, been a lot of fun. Telling you, if I double this thing and get to 10,000, I want like a Roman general type tribute. Damn it. That's what for this. This is a bunch of bullshit is what it is. Okay. That is pretty much what I have to tell you about trading the market today. I continue to see one issue after another issue with traders. They all can be boiled down to some of the same issues of letting winners go too soon, holding on to losers too long, expecting immediate returns, freaking out when something doesn't go their way. I mean, it's always the exact same psychologically driven issues. It's not like, yeah, there's a lot of shit to learn here. And I was asked even today, is this really going to take 2 years? Yeah, it takes 2 years. And the reason is there's a lot to learn here, but that's not what takes the 2 years. Chess can take you a day to learn. I used to play poker all the time. Played it growing up. Considered playing it professionally. You can teach someone poker in an hour or two. Less if they're a little quicker on the uptake. But how long would it take you to get good at it? How long would it take you to get good at chess? To get good at poker? It takes a long time, even though you got the rules down. And this has a hell of a lot more rules than chess or poker does. There are all different spreads, and then there's, shorting, and market dynamics, all of those things, swing trading, day trading, long-term investment, all of it. There's a lot to learn here. And then you got your indicators and analysis paralysis. And that sets people back, by the way. These people, there are 50 million friggin' indicators. You stop with the indicators. There is no holy grail. Yes, there are certain indicators that are helpful. Figuring out relative strength is helpful. That is an indicator that lets you narrow down institutional behavior. Knowing the moving averages is helpful. Those are real, actual, reported data coming back to you. This is what the average price was over this period of time. That's useful information. It's useful to know if the EMA 3 crosses above the EMA 8. That gives you an idea of a trend. Those things are helpful. What is not helpful is to use 4 or 5 and you got the cloud and you got your fib lines and you got, this squeeze study on here and MACD, and why? Do you really think that these indicators are going to all of a sudden pop up and tell you the exact? I mean, you would think that if, after losing time and time and time again with those indicators, at a certain point you would stop trusting the indicator. Indicators are only as good as group consensus allows them to be. And we talked previously about how trend lines have started to become more important to institutions and their algorithms than moving averages were. And you could see it. You could see it as the price moves. That doesn't mean you get rid of moving averages, but it means you start paying attention to trend lines. But there's a reason the 18.5 moving average nobody cares about, because nobody's caring about it. A lot of these are self-fulfilling prophecies. If millions of people all follow the exact same indicator, the indicator has meaning, right? That metric has meaning. But you can get into analysis paralysis. You become an indicator junkie, as Dave Wise says. And again, trust me, it's going to get you nowhere. You're going to go through all that. By the time if you come out the other side and you're a profitable trader, your charts are going to look much cleaner. They will look a lot like this. Very simple. I have volume here. I got VWAP here. I have 3 and 8 EMA over here. I have the top of the moving averages over on the daily chart. You don't see a million indicators here. If I want to do further analysis, I'll put OBV down there. I'll put other types of measures there to look at it, but that's not my standard on the charts. So does it take 2 years? Yes, it takes 2 years, because it probably takes you time just to get through all that indicator madness. And then comes the psychological aspect of it. The way you trade psychologically is generally opposite than how your brain is conditioned to think about how you should trade. How you're conditioned to think things are on sale, I should buy them. I have profit, I should take it. You'll never go broke taking profits, says the person who has never had a profitable month. You have to rethink things. And where do you learn how to do that? Because it's really hard, right? I mean, to do that, you probably need something that can help guide you through. Well, I'll tell you what can help you do that. You can read the damn Wiki. Good night, everyone.